If you love our crypto content or are looking to learn even more about crypto, be sure to check out and subscribe to our new YouTube channel after this video dedicated to all things crypto. Find new videos every week. Be sure to check the link in the description. Jimmy, welcome back to Real Vision.
Thanks for having me, Ash. It's always a pleasure.
It's such a pleasure to have you here. I'm so excited. This is our first time on camera together. I've interviewed you before, but I was off camera that time. It's a pleasure to be on camera with you. I should say, Jimmy, you're one of our favorite guests. You have one of the broadest scopes of anyone in the Bitcoin space, from the philosophical to the pragmatic, from the spiritual to the technical. This is like you span it all. And with that, I should say, you are the author, one of the co-authors, I should say, of the recently published Thank God for Bitcoin, the Creation, Corruption, and Redemption of Money, now available in hardcover, paperback, Kindle, and Audible edition.
That's right. And it's a book focused on the moral argument for Bitcoin. And it came out of a bunch of meetings that we did over Zoom during COVID. So I feel like it was very productive given the unproductiveness of that whole time.
Yes, very much a difficult time. You did a wonderful interview or conversation, I should say, with Robert Breedlove, aired on Real Vision, actually fittingly enough, last Christmas Day, December 25th.
Yeah, and he's one of my co-authors. So we had talked about a lot of the stuff that we talked about on camera before. And, getting into the depths of the morality of money and how it really is a way in which the state can take away money without direct taxation. I thought it was an important part of the moral calculus that we have to actually do in order to figure out where to invest and so on.
Yeah, and I think it's so important to make that case. So many people discuss, potentially outside of the community, discuss Bitcoin as though it's this almost amoral entity. And for you to have that context and that view from a perspective of morality, I think is a fascinating one. Which brings me to a question that I've really wanted to ask you. So much of the foundation of how you think about Bitcoin and the world is talking about value as kind of an abstract proposition. What does that mean to you? Bitcoin is a store of value and value itself.
Yeah, it's an interesting question because it's a metaphysical concept, right? The whole idea of value. There is sort of this Keynesian fallacy that value is intrinsic, that it exists on its own without any humans involved or whatever. Value is subjective. It only has value according to what people assign it. And in that sense, it's an abstract thing. It doesn't necessarily exist in the real world, as it were, value qua value. Right. Instead, what value is it's the utility that other people can derive out of it. So water is obviously valuable to people because it helps them live. Air is also valuable, but they're also not very scarce, and therefore it's not very expensive. It has value in the sense that it's essential for living or for doing or for entertainment or whatever, things that people might want to do with it. But scarcity plays a big role in value. And that's something that money definitely brings to the forefront as you think about what value actually is.
Right. One of the questions I've always wanted to explore with you is about your background, your journey into this space. Tell us a little bit.
Sorry for interrupting your video, but I have an important message to share. At Real Vision, we pride ourselves on providing the very best in-depth expert analysis available to help you understand the complex world of finance, business, and the global economy. So if you like what you see on Real Vision's YouTube channel, that is just the tip of an iceberg. You should come over to realvision.com and see how we are not leaving any stone unturned, from publishing more in-depth videos, live discussions, written reports, and our latest feature, The Exchange, where you get a chance to engage with experts and fellow subscribers and learn from everyone's experience. It is an experience which you live and you learn from. So if you go to the link in the description or go to realvision.com, it costs you just $1. I don't think you can afford to be without it.
Value actually is.
Right. One of the questions I've always wanted to explore with you is about your background, your journey into this space. Tell us a little bit about how you got to be where you are today.
Yeah, so I've been a programmer all my life. I got into computers back when I was 9 years old. I didn't even know what computers did. I just knew I wanted one, and I was one of those people. And my dad got me the Commodore 16 back when I was 9 years old. And this is not the Commodore 64, which had all the games. Commodore 16 actually only had like 3 games on its platform, and one of them was Visual Jack Attack, which I played all the time, and then the other 2 were text-based games. So having immigrated as an 8-year-old to the United States, my English wasn't that great, so I couldn't play the text-based games. I spent a lot of time on the computer trying to learn how to program, and my mom found me some people to teach me how to program and so on. And that became my career, after college and so on, where, I did, something like 14 different startups, in my career. Many of them did very badly. A few of them actually went public. So, I did okay in that realm as a programmer. I got into Bitcoin back in 2011 after reading a Slashdot article. And if you don't know what Slashdot is, it's a website for tech geeks like me, where you read about various things like a new Linux distro is out, or here's a new release of Python or something like that. And on I think it was February of 2011, almost exactly 10 years ago, where I saw a headline that I couldn't really parse, and it said Bitcoin has reached dollar parity. I was like, what does that even mean? Like, is Bitcoin some I don't know, how could it be reach dollar parity? What does that even mean? So I read about it and learned about what that was, and eventually really got into it in 2013 when I started contributing to open source projects that were related to Bitcoin and so on. But that was the sort of like genesis of everything. And during that whole journey from 2008 to 2013, I was learning about Austrian economics as well.
Right.
Especially after the 2008 bailout, where something like $850 billion was pumped into the economy. And I couldn't understand why that needed to be the case, or where that money came from, or anything like that. So I really started looking into, the economy or money and how it all came about. So by the time I heard about Bitcoin in 2011, it sort of clicked. I understood it immediately because I was primed to do so from all of the economic things that I had learned since 2008. And as a result, it's, as you were saying, it's become sort of like almost all consuming. I've gotten into Bitcoin in every aspect that I could. I'm teaching developers. I'm also doing speaking engagements, talking about how it helps poor people in different countries, talking about the morality of money. I've thought about this a lot, it's become I guess my life's work in some ways.
Yeah. We should also say that you are the author of Programming Bitcoin, Learn How to Program Bitcoin from Scratch, which is an O'Reilly book. For people who are on the financial side, O'Reilly books are like the hardest core tech publishing books. They're the place where really serious programmers go as a reference to understand their craft. And it is a very high compliment that you are the author of that book.
Yeah, and that was something that I approached O'Reilly with as a result of doing my 2-day course where I teach programmers all about how to program Bitcoin. And, that's how I got my start, but it's obviously expanded into a lot of different areas, including, the Little Bitcoin book, which is an educational book for people that don't know anything about Bitcoin to, thank God for Bitcoin, which is sort of like intermingling my Christianity with Bitcoin, which I totally did not expect, but it sort of kind of happened, and thank God that it's happened. It's been quite the journey for certain.
Yeah. As we talk about the journey, I'm curious, how did your very serious programming background influence your view of economics when you came into it? Because it sounds like, as you tell the story, that you weren't someone who had a traditional economics background. You were discovering this as you went down the Bitcoin rabbit hole.
Yeah, and I think programming definitely helped me in the sense that you have to know the primitives in programming in order to do anything, right? Like you have to know, okay, how does how does this language handle like memory, or how do you do like a for loop, or how do you do if statements, and how do you write functions, and is it object oriented, all of that. So approaching economics, like learning sort of the traditional model, which is based on macro, especially, it's just sort of like, okay, well, here's the money supply, and here's this PV equals MQ equation, and it's like, okay, that it doesn't say anything about the primitives at all. And so, like when I started reading about economics, none of the sort of traditional economics, the Keynesian economics, really made any sense to me, because it didn't build on sort of like a solid foundation. It was just sort of like, here's what we think the whole economic activity is, and here's how we measure it. And it's like, well, these numbers don't mean anything because they're mixing good numbers with bad numbers and saying that the accumulation somehow averages out. There's no way you can know things like that. And thinking as a programmer, thinking adversarially, I was thinking, okay, well, then that could get game, that could get game, that wouldn't work. And sure enough, the more I've studied economics, the more I realized like every number gets game for the benefit of those that it benefits, right? Like, so the CPI number, for example, is a very good one. Lynn Alden has a very long article that I just read about inflation. And it goes through, all of the different ways in which that number is manipulated, including the hedonic adjustment, the hedonic quality adjustment, the various goods that are put in and out. GDP is another number that's heavily manipulated for the sake of those in power and so on. So for me, looking at things from sort of that weird macro perspective that doesn't really have first principles per se, but it's just sort of like looking at the world and saying, okay, well, here's what we think is actually right, didn't make much sense. But Austrian economics is very much from first principles, and it was about figuring out, okay, well, here are the people that benefit, who are the people that are getting hurt, what's actually happening in sum here. And that made a lot more sense to me. And I can definitely say like Rothbard and Mises and, Henry Hazlitt and even Hayek to some degree, like they've all influenced me in thinking from first principles and going through sort of like the incentive scenarios in the same way that I would, as a programmer, try to figure out, okay, well, here's how this particular program gets used, and, like, what can people do with it, and so on. So it definitely made me think of economics in a very different way than the traditional economists, I guess.
Yeah. So with that as the foundation, Jimmy, I'm sure most of our viewers already know about you and understand your background in philosophy. But for those who do not, tell us a little bit the 50,000-foot overview of how you think about Bitcoin, why you think it's important, and what role you see it playing in the world.
Yeah, so the 50,000-foot view is that this, Bitcoin is an excellent store of value in the sense that it stores value over time. It also happens to be pretty good at transferring value over space. Final settlement in 10 minutes is, halfway around the world is amazing. But it's really about storing value over time. And if you look at the current monetary system, there aren't very many good places to store value over time. The current sort of ideology of those in power is to make sure that the money is flowing through the economy, right? Make sure that the velocity of money is fast enough that everyone somehow that creates wealth. And if you have a place where you can store money, then that money is parked. It's not really moving, and for them, that's bad. So they purposefully make it so that there aren't that many good places to store value. The traditional places to store value are real estate, stocks, and gold. And all three of them have some flaws to them. So real estate has enormous transaction costs, like 5-6% every time you want to buy and sell. Stocks require an insane amount of research. If you want to figure out which stock to buy, you have to not just look at their balance sheet, but the history of like their executive team and all this, their competitors and all this other stuff that honestly, most people are probably going to outsource to like a credit rating agency or to a research report or something to that degree. Gold is centralized and therefore it's fractionally lent, which means that there's a lot of gold that doesn't exist that's probably trading in the market and so on. With Bitcoin, you get something that has low transaction costs, at least relative to something like real estate or stocks and things like that. It's also very easy because you don't have to choose among hundreds and hundreds. We can talk about altcoins later, but you can just buy Bitcoin. It's fungible. The same Bitcoin that a Silicon Valley insider with the best deal flow gets, the Indonesian farmer gets. It's not like gold in that it's centralized and it's fractionally lent. Instead, you can possess it yourself. It's a bearer instrument. So it's better than all of those other things. So the 50,000 foot macro view is that this is a way to save. It's a savings technology. It's a way to store value over a long period of time. And that allows us to actually like focus on the future. If the money is continually degrading, or if you have to constantly invest or research things or worry about transaction costs to even just keep your money, that's a lot of effort not spent providing goods and services to the market. So the 50,000 foot view is that it's really civilization building technology. It helps people to be creative instead of just sort of moving money around, which oftentimes investing ends up being.
Yeah. Jimmy, what might the world look like in 5 or 10 years if Bitcoin continues to follow the trajectory that you invest in it in terms of the broader philosophical upside for the asset?
Yeah, so 5-10 years from now, we don't really know exactly what the world will look like, but here's my speculation. I suspect that a lot more people will be storing value in Bitcoin and sort of like taking off the burden of investing. And this is a burden that anyone that has any amount of wealth has. And honestly, this is part of what you're trying to provide at Real Vision is to provide value to investors so that they could at least navigate this investing waters without too much trouble, right? Like it's a way to sort of shortcut some of the heavy work that goes into investing, which is research and knowing your investment and figuring out, which sectors are hot, which ones are not, and everything else. Instead of putting so much energy into that, the people that have acquired this wealth, whether through startups or through, whatever that it is that they've done, they can instead put their productive capacity into creating again. Instead of, trying to keep their wealth or spending all their energy keeping their wealth, they can create new goods and services and products into the economy and make cooler stuff, right? So instead of Bill Gates right now, who, obviously created Microsoft and, created an entire ecosystem and so on and many products, like just sort of like sitting around trying to from what I hear, he was buying land all over the country and, doing all these different investments as a way to preserve his wealth. Instead, he could go and create more stuff that other people might want, right? Instead of, just sort of sitting around trying to invest. And this is something that I've noticed about a lot of people that have gotten rich, is that they spend all of their time like investing, right? They graduate to angel investing or being a limited partner in a venture capital firm or a hedge fund or something like that. Instead of putting their productive capacity into something that's awesome, they're putting their productive capacity into just keeping what they're doing. This is what I call sort of the Fiat treadmill. You have to run to stand still, which is, kind of horrible.
So I have to ask, Jimmy, you mentioned altcoins. We're recording here on the morning of Monday, May 10th, which is the Monday after Elon Musk was on Saturday Night Live talking about Dogecoin. So what is your view of Dogecoin? Dogecoin from the view of a Bitcoiner.
Yeah, so Dogecoin is very interesting because it was created to be sort of like a fun meme currency, right? It's not serious at all. It doesn't pretend to be something revolutionary for some industry or for some use case. Most other coins that came out in that era usually had some sort of tagline like, hey, we're going to be a faster Bitcoin, or we're going to be a more a larger supply Bitcoin. We're going to have a different monetary policy. We're going to use this coin for this industry. We're going to do this or that. Or there was usually some purpose to the coin. This one clearly was not meant to be that, right? It was made as a joke. There's a little dog. I think it's a Shibu or something like that. That's sort of the icon for it. And they have weird catchphrases like "such wow" or something like that to express the joke around the whole currency. It's a joke currency. But in a sense, it's very appropriate sort of to this millennial generation, because as we saw with GameStop, AMC, and all these, even Hertz and some others, their whole shtick is it's putting the irrational into investing, right? It's not about fundamental value anymore, and I think that's what Dogecoin kind of shows, is that it never was about the fundamental value, especially with a lot of these altcoins. It was never about what they claimed that they would be able to do. It was always about the token. It was always about getting people interested. It was always about marketing. And Dogecoin is sort of like the apex of this ridiculousness, where you have no fundamental whatsoever. There's no white paper. There's no like given reasons even for why it's pumping. It pumps because people want it to pump, much like what happened with Hertz and GameStop and AMC. So in that sense, it's very appropriate that it is going up, because I think it's showing altcoins to be the speculative vehicle where it's really more of a gamble than anything else. I mean, I have heard on Clubhouse and other places people arguing and saying, well, Elon might take over Doge and make it like the greatest currency ever, and that's why I'm investing in it. I'm sure there are people that are kind of thinking in that direction. But for me, it never was like that. And if you look at the actual technical aspects of Dogecoin, it hasn't had any updates in like over a year and a half, something like that. It's a fork of Litecoin. It's merge mined with Litecoin. It doesn't have any of the upgrades of Bitcoin. At least Litecoin has SegWit. Dogecoin doesn't have SegWit. It's certainly not going to get Taproot if it doesn't have SegWit even. No one's really maintaining it. It's just sort of this currency that's there kind of as a meme. Much like Hertz as a bankrupt stock was going up, it's kind of like a bankrupt crypto that's got no maintenance whatsoever, that's going up because people wanted to. And I would say what Keynes said a long time ago: the market can stay irrational longer than you can stay solvent. So be careful shorting. But at the same time, I think it really is like the height of irrationality that this coin of all things is, going to some insane market cap.
Yeah, very well said. And also the perfect segue into what I wanted to chat about next, which is, I think, one of the biggest misconceptions out there about Bitcoin is that Bitcoin is this like static entity that's somehow stuck in 11 years ago and that it's not changing. And of course, that's not true. Very few people are as comfortable talking about and as knowledgeable about the inner workings of what's happening in Bitcoin Core. Give us a little bit of an update for where Bitcoin is right now and what's coming, as you mentioned, in Taproot, especially for people who are less technically inclined, who are just trying to get the 50,000 foot overview of what's actually happening.
Yeah, so Bitcoin has had many different sort of backwards compatible upgrades over the years, starting with pay to script hash, check lock time verify, check sequence verify, SegWit obviously, and this upcoming one, which is Taproot. And Taproot encompasses a bunch of different technologies in one backwards compatible upgrade. So we have, for example, Schnorr signatures. This is an older algorithm than ECDSA, which is being used in Bitcoin right now. But the reason why Satoshi chose ECDSA, or at least why it's speculated Satoshi used ECDSA rather than Schnorr, is because Schnorr was under patent at that point. The patent expired, I think, sometime like maybe in the early teens, something like that. So it can now be freely used by anybody, and that's part of the upgrade. And Schnorr is not only just technically simpler, it also allows for something called signature aggregation and key aggregation, which is an area of academic research. And from a 50,000-foot view, what that means is that you get more privacy. So right now, you can tell which ones are multi-sig versus single sig by just looking on chain, right? Like all that. The security of your Bitcoin is more or less expressed in the type of address you have. So it used to be that addresses that started with a 1 were single sig addresses, and the addresses that started with a 3 were probably multi-sig addresses. And with SegWit, that changed to BC. The addresses that start with BC1 but are a certain number of characters versus addresses that start with a BC1 and are a little bit longer. The shorter one is single sig, and the longer one is probably multi-sig. With Schnorr signatures and Taproot, what you get are both of them look exactly the same. So an attacker can't necessarily know, okay, well, this one's a single sig. I'm going to go and rob that guy's house, and I'll be able to take his Bitcoin or something like that. So there's a security upgrade there. There's also a lot of implications for Lightning Network. It makes the entire running of Lightning a lot easier. It also increases the transaction byte efficiency. So you can put transactions in less bytes, which means that you can have more transactions per block, increasing throughput a little bit. You also have something called a mass tree, which allows you to reveal, you can have many different conditions, for example, for unlocking your Bitcoin. So you can have like 7 different conditions instead of 1 or 2 or 3. Well, you could have 7 different conditions right now. It's just that you have to reveal them all every time you spend. So you can have, for example, 2 of 2 of these people, 3 of 5 of these people, 7 of 9 of these people, and so on. You would have to reveal all of that if you were to do it currently. With Taproot, what you get is the ability to say, okay, well, whatever I unlock with, that's the only thing that I'm going to reveal. If it was 2 of 2 of these people, that's all I reveal. If it was 3 of 5 of these people, then that's all I reveal, and so on. So there are security upgrades, there are utility upgrades, there are efficiency upgrades. Those would be the main ones that I would say are the main things in Taproot.
And when you talk about efficiency, we're generally talking about speed. What are the implications for the network itself with the potential upgrades on the speed side?
Well, it would be more space than speed, I would say. And that means that you get slightly lower fees with the same amount of transactions. And ultimately, this is a setup for the next soft fork, which I think will be even more important, which would be something like cross-input signature aggregation. Now, what does that mean? Currently, what you get, if you want to sort of get more privacy on your Bitcoin, what you can do are, there's a variety of protocols, but one of them is called CoinJoin. And what CoinJoin does is you have one or more inputs and one or more outputs in a giant transaction that you put in with everybody else. So you're sort of mixing your money together. So think of it like everyone has like $100 bill, and you put it all into one pile, and you take somebody else's $100 bill. That way, like it's not traceable and so on. That's what CoinJoin is like. With cross input signature aggregation, it economically incentivizes coin joining. So by default, because of that economic incentive, what you get is this ability to coin join at a discount to doing something in the clear. So more people will coin join, therefore Bitcoin will become a lot more private. And that's something that will come as a result of the next soft fork after this one. But this soft fork needs to happen first, because cross input signature aggregation relies on Schnorr signatures, and that's one of the things that this current one needs to put in.
Yeah. So it's very much this sort of incremental buildup of the technologies that are foundational, increasing the functionality to do potentially greater things as we move forward.
Yeah, it's definitely a slow but steady process. A lot of people tend to think of technology in terms of like move fast and break things, that famous quote from Mark Zuckerberg. That is not what you want to do with people's money. If you do that with people's money, you get all sorts of hacks and exploits and so on. We seem to hear about some sort of DeFi exploit every week on some weird token or something like that, where $30 million in network value is lost or something to that degree. That's what happens when you move fast with that stuff. You don't want to put people in that position. So a lot of the Bitcoin upgrades tend to happen fairly slowly because you want to make sure that everything is thought of. And these programmers are very good at thinking of like the 1% scenarios where, okay, all right, this might happen if this person does this, and this, then they might be able to exploit things. That sort of stuff is happening all the time on DeFi. Like people are thinking of ways to exploit these contracts for their own benefit and screw over some people at the expense of others, and so on. So with Bitcoin, you get this very significant amount of review on every single aspect of the upgrade. And that can often take years, right? Like you have to think of it more like OS programming or something like that. They don't produce new major versions of Windows every week. That's not what they do. They do that like every few years, or Mac OS or Android or whatever. It takes a lot of effort and time to make sure that there aren't security vulnerabilities and so on. And for that reason, it moves slowly. It might not be to the satisfaction of people that are impatient, but in a sense, security is extremely important for an asset so valuable. So it's the right way, I think, to go about like producing new features and so on.
Right. One of the other things that you mentioned was the Lightning Network, which is a layer 2 solution as a payments protocol. Talk a little bit about the Lightning Network and what you see as its potential significance as it begins to gather steam.
Yeah, so the Lightning Network is a layer 2, and the way I describe it is you can have these channels open, and channels are really just transactions on the Bitcoin ledger, except if you and I, Ash, were trading Bitcoin back and forth, say we were doing a lot of business, and you're buying stuff from me, I'm buying stuff from you, and we do like 100 transactions. We could put 100 different transactions on the Bitcoin blockchain, but that would be kind of inefficient. We could do what invest or traders call technical netting, right? Like we can just say, okay, well, I pay all the 50 payments that I paid you amount to this many Bitcoins, and all the 50 payments that you made me amount to this many Bitcoins. Let's just subtract one from the other, and you have that. That's what a channel is. It's one transaction on the network that represents a lot of other transactions. Now, if I have a channel with you and you have a channel with Alex or something like that, then what you can do is what I can do is I can pay Alex through you, and that's the start of a network. You can have If Alex has another channel with Nico, I can also pay Nico by going through both you and Alex. We just have to net it out and so on. And that's essentially what the Lightning Network is. It's a network for payments where you run through various nodes and so on, and you can pay and receive payment from various people on the network using this network. So what are the implications of Lightning? Well, first of all, it's really nice because you can pay people instantly as long as you're connected to the other person on the network and there's enough channel capacity. It's also an area of research because decentralized networks like this haven't really been studied that much, and making sure that everything works and optimizing certain things. It turns out that these are some significant questions in graph theory and networks and so on.
Right.
But looking forward, what does it mean, or how is this going to develop? I think we're starting to see what I would call sort of layer 3 apps. These are apps that are built on top of the Bitcoin Lightning Network. So Sphinx Chat is something that is super interesting, and it's built on top of Lightning. And I'm sure many of your viewers have different messaging apps, right? They have like WhatsApp or Signal or Telegram or something. They're all messaging apps, but what they don't have is some sort of like native payment layer. And as a result, you get a lot of spam. Right. And this is the case in almost anything that doesn't cost anything, because when it's free, then people start exploiting it for their own benefit. Well, what Sphinx does is it puts money back into the equation because it's built on top of the Lightning Network. So, for example, I can create a chat room that's open to anyone, as long as that filters out all the bots, right? Like the people that are going to do that. And even if they do pay and get into this tribe or whatever, you have the option of making people stake their Bitcoins in order to comment into the group. So if you're saying something, what you have to do is stake some number of sats. So stake like 100 sats. And you get the 100 sats back after 8 hours if your comment was deemed to be not spam, which is great. But if it is deemed to be spam, then the administrators of that group take it. So in a way, it disincentivizes spamming in these groups, which honestly could be very functional, right? Like it's a way to filter the conversation with money. Imagine if they did something like that for Twitter. Like how much better would Twitter be, or how much better would Facebook be, or how much better would a lot of these platforms be if you had this natural money layer that filters for this stuff. You don't have to worry about brigading or Sybil attacks or all sorts of these vulnerabilities that show up in these communities where you have bots, essentially people that are trying to influence things to be a certain way. Instead, you just have money. If they want to do that, yeah, great, that's fine. But you're going to have to spend a lot of money, and it costs them something instead of costing them very little in creating a bot and so on. So for me, the Lightning Network, as I've said in other places, I think is the decentralized web that we always wanted. This is what the internet was supposed to be very early on, was some sort of really decentralized network where there weren't like these silos and so on, but it's evolved to where we have all of these walled gardens that are controlled by these central entities like Facebook and Google and Twitter and all of these. Instead, you get real decentralized networks that people create on their own. And when you have centralized entities, you have problems like censorship and bots and people gaming the system to gain influence and so on. Instead, it becomes much more of a fair system that isn't subject to some centralized control and so on.
Yeah, and that's one of the things that markets are so good at doing, is setting up these decentralized systems where you can efficiently create things like supply and demand and have a balancing mechanism in price to sort them out, which is a very Austrian concept.
Yeah, and price is a wonderful thing because it gives you a signal about how much demand there is, and if there's, if the price is high, it brings in more producers. It gives the market what it wants. It gives people what they want instead of centralized controllers just sort of guessing what they might want. I mean, how many times have you seen like Facebook change something and everyone complained, Google changed something, everyone complained, Twitter changed something, everyone complained? They don't really know. They're just sort of guessing. Maybe they do consumer surveys and so on. But in a decentralized web, everyone tries something different. And eventually you come to sort of like a market that understands what, like the market's smarter than any individual or even any single corporation. And I think that, it could produce a lot more innovation that way through a truly decentralized web.
Yeah, I think this is such a fascinating point. One of the questions that always comes up from my very smart finance friends who are maybe a little bit skeptical about the new decentralized world that's getting built is, well, why do I need that? I don't understand. I don't understand what the benefit is for me. And I think that the framework that we're talking about here is one that is about organic demand actually being satisfied with organic supply, so that it comes back to when you think about the sort of Soviet-style economics, right? When you had a bureaucrat somewhere in Moscow or Pyongyang trying to plan grain distribution, for example, and it fails miserably. Whereas here in the Western world, we're fortunate enough to live in a system where markets are what sets things. And when you go into a store, the goods that you want to buy are there at hopefully a price that you can afford, because it's in the interest of the suppliers as well as in the interest of the consumers to meet in the middle and have a way for that to distribution to take place.
Yeah, and that market dynamic is a wonderful thing. It's what builds civilization. It's what gets people to create goods and services. It's based on what other people are demanding. And when you produce something that the market wants, it's a great feeling. Like I suspect that a lot of like the depression and gloominess and bad feelings in the world are due to people that are essentially not producing what the market wants. They're doing some bureaucratic rent-seeking job that doesn't add anything to anyone, and they're extremely dissatisfied and suffering from depression or addiction or something else as a result, because they know deep in their heart that they're not contributing anything. But when you have pure markets and demand by people, you don't have to go to those things, because providing something to other people is deeply satisfactory at a human level, and it's something that people crave doing. It feels really good when you provide something to someone that they wanted and they're paying you for it. I mean, how wonderful is that? And yet, it's kind of disparaged by certain people that don't understand the power of decentralization or the evil of centralization. In many ways, if you are living under a centralized system, you are beholden to that authority and you are their slave, whether you know it or not. A lot of people don't realize just how much power the centralized entity has over them. Although we're starting to get the hint, because, a lot of these tech giants, for example, are becoming deeply unpopular as people are realizing just how much they are abusing their power for their own profit and at the detriment of their users and so on. As they say, if it's free, you're probably the product, and this is certainly true of every free platform like Twitter or Google or whatever. You're being sold, right? You're the product. You're being sold to the advertisers. The advertisers are their real customers. So, in a sense, having a decentralized market economy allows us to get what we really want at a better price, instead of being subject to only a few choices. It gives us more choice. It gives us better goods, better quality goods. It probably puts us closer to the actual producer of the good or service than sort of these like giant faceless corporations that are providing it for us. So I'm very optimistic about a decentralized future. I think it brings us closer in community. And I think it ultimately leads to civilization flourishing.
Yeah. Jimmy, that's fascinating and such a compelling vision of the world. I'm curious, how long do you think it will take us to get there? What might that path look like? What's happening today that are the initial steps that people are taking down that road?
Well, I mean, Bitcoin is certainly one of the paths that we have towards going to a more decentralized world. But yeah, I mean, the world is largely centralized around these things that we call governments. So there's no reason why the United States is one giant country, or it should be. Like it should be lots of smaller states, because many of them don't even agree with each other. I like local autonomy is a good thing, and that used to be the historical norm until fiat money came along and sort of consolidated a lot of different territories into one giant one. So I suspect that it'll take a long time for everything to sort of collapse. I am going to be a little bit pessimistic here in the sense that I think it'll get worse before it gets better, and we're starting to see some of that happen with the money printing that's happened in the past year. I think fiat money will sort of die at some point, and people will go back to sound money because harder money is better for storing value, and people like storing value, like being able to keep the value that they create. But that will take a while. It could take 5 years. It could take 50 years. I'm not really sure. But the path by which we get there, I think, involves Bitcoin for certain, because it is the way in which we can save and opt out of the current system. And this is one of the messages in the book, Thank God for Bitcoin. The thing that frustrated us when we read other books of similar genre was that they more or less said, okay, now that you know all of these bad things about the current monetary system, here's what we need to do. We need to get a political action committee together and get enough people to vote to go back to the gold standard. And we're like, that's not going to happen. There's no way that anyone's going to vote for that, or we're going to be able to convince enough people. Instead, with Bitcoin, you have this ability to just opt out on your own. You don't have to be getting everybody else on the gold standard. It'll just sort of happen naturally because it is a better money. It's more convenient. It's better to store, and it'll be, it'll have more utility and so on. So as a result of that, I think the economy sort of slowly Bitcoinizes. We're sort of seeing that to some degree right now. Michael Saylor is Bitcoinizing his company, for example. A large part of the value of his company right now is the Bitcoin that his company is holding. Tesla obviously has some, and there's a bunch of other companies that are going to be doing similar things. And this is the natural market dynamic, is that when there's little to no yield anywhere, people go and look for yield. And there's a lot of yield in Bitcoin right now. Even like a futures cash and carry trade is returning something like 40% APR. So exposure to this asset is becoming sort of the norm. And as more companies become more and more Bitcoinized, then, instead of the crazy inflated valuations that these stocks have, they come closer to reality. I think my friend Preston Pish is fond of saying how, like the yields on these stocks make no sense whatsoever, right? Like you have to hold these stocks for 50 years to get like the amount of dividends that would justify buying them. So it doesn't make any sense, but people are still paying for it because there's no good store of value. As people recognize Bitcoin as a store of value, a lot of that closer to reality, and a lot of these firms can ride it out because they're Bitcoinized. A lot of them that aren't will probably die. A lot of these zombie companies, for example, I think will die a gruesome death, right? Or I don't know, maybe they'll fade into oblivion. And that's a very good thing because you get more creative destruction. Other companies will come in to take over the role that they had. I read a statistic about IBM, I think over the past 20 years has done 165 billion in stock buybacks. Their current market cap is like 105 billion, something like that, which is like, okay, so something is really wrong here when that is how money is being spent. With Bitcoin, I don't think you get zombie companies like that. Instead, you get much better companies that are dynamic, that are profitable, that are giving returns to their investors and so on. So that's probably the path that it'll take. the asset inflation bubble will come down as the dollar sort of goes into this inflation mode that I think we're starting to see with lumber, plastics, and aluminum, copper, and all these other raw materials. It'll filter through the economy over the next 20 months or so. But yeah, that will be sort of like the beginning of the end for the fiat era. I think the Bitcoin era is coming, and we'll have sound money, and we'll have a better civilization. But it'll get worse before it gets better.
That's not an excellent, inspiring thought.
It's not. I think my friend Parker Lewis has this whole series called Gradually Then Suddenly, and I think that's how things tend to collapse is gradual, then it collapses all of a sudden. Even like the Weimar Republic, I think like it took like 6 years for prices to double, and then it took like 12 months to double again, and then it took like 3 months to double again. It like happens very, very quickly, and by like 9 months later, everything was done. So something like that I expect to happen, but exactly when that suddenly starts, I can't really tell you.
Yeah. Jimmy, what else are you interested in right now? What are you doing that is getting your attention from a technical perspective, from a philosophical perspective? What projects are you interested in? What new implementations or use cases for Bitcoin right now have you intrigued?
Yeah, so Sphinx and Lightning Layer 3 have been on my mind quite a bit. I think there's a lot of businesses that can be built on something like Lightning. So somebody was asking, hey, could you build like a decentralized Uber on something like Sphinx? I'm like, yeah, you actually could. Like as long as there was enough capacity, and once the Lightning network is a little more mature, what you could do is open a room for your particular city. Like there's no reason why Uber has to be global, right? Like you could have local things. You join that tribe and say, hey, you know what? Like, it costs some amount of money to join that tribe. And then you put out a, call for, okay, I want to go from this place to this place, and then get automatic bids. Now, you need some sort of interface to do that. And, so somebody needs to write that software and so on. But it's entirely possible that you don't have to have this, central entity sitting in the middle capturing a lot of that value. The value could be going towards the driver and so on. And I think that's ultimately what a decentralized economy looks like, and why maybe a lot of VCs are not quite as enthused, because they like capturing value. They like companies that capture lots and lots of value for themselves. But in a decentralized economy, there's nobody sitting in the middle, like sort of collecting taxes for themselves. Instead, a lot of the value is in the software and already kind of written, and it goes to the people that are actually performing the work. I'm excited about that sort of economy evolving out of the Lightning network. We're nowhere near that yet. Lightning has a lot of developing to do. We just had like dual funded channels come online for the first time, like a few days ago. That allows for a more robust network if we had a lot more of those. But it's going to take some time. So that to me, from a philosophical point of view, points us towards a more decentralized future, a more direct consumer to consumer interaction, rather than having a business sit in the middle capturing it.
Yeah. I know for you that Bitcoin is central to your view of the way the future is going to evolve. I'm curious what your thoughts are about how some of the other functionality that's taking place on other coins and other ecosystems, for example, smart contracts or NFTs in Ethereum, things like Web 3.0 functionality, Filecoin, which is a distributed cloud-based storage solution, how some of those applications, functionality, and ideas might come into the Bitcoin ecosystem.
Yeah, I mean, I don't know if they're really providing that much value. Most of them are justifications to create a token for themselves, and that to me is sort of like a scammy play. Like you don't need a token. Why aren't you like all of the things that you mentioned could just as easily be paid for in Bitcoin? And if there were a market for it, then people would buy it and so on. The only reason why they haven't is because there isn't such a demand, right? There aren't a bunch of Bitcoiners saying, "Oh, how can I get free cloud storage right now?" Because I'm running out of space on my hard drives. They're not saying that at all. Like usually, I mean, you can buy like a 12 gigabyte hard drive for like $150 right now. Like there's no need for cloud storage at the moment. I mean, there are certainly for businesses, but they want reliability and they go to AWS or Microsoft Azure or something in order to get it instead of this very shady, quote unquote decentralized coin that you have to buy and so on. It's nowhere near the level of reliability for them to use it. So really, it's about the token. So for me, none of them have really proven out their use case. And if they were to prove out their use case, generally it's going to be cheaper, more efficient, and faster in a centralized way instead of having this token sit in the middle. The token in this case is the value capture mechanism, or that's usually how they sell it. The problem is that very few people end up using the service because so much of the value is captured by the token. It's not going to the actual providers of the space or whatever. A lot of these business models only work because they're printing their own money. You can make almost anything work if you print your own money. Witness the federal government and how inefficient it is, and how they're able to do it because they can print their own money. So, I like if there is something useful, I think people will build it on Bitcoin, but I suspect that most of it isn't that useful. I mean, smart contracts are in Bitcoin, right? Like they exist right now in Bitcoin. They've been there since day one. A lot of people don't understand.
Tell us more about that. Yeah. People
don't understand that addresses are smart contracts, right? Like they're a smart contract saying, pay to the hash. This is paying to whoever can sign with a private key. Whose public key's hash is this, something to that effect. That's a smart contract, and every Bitcoin transaction is executing a smart contract. It's just that people don't know that it's a smart contract because that's not the buzzword that Satoshi chose to say. Instead, they're enamored with Turing complete smart contracts, which is what Ethereum is all about. But that, of course, makes it a way more vulnerable. What I say is it's not necessarily Turing. It is Turing complete, but that also makes you Turing vulnerable. This is why you have so many exploits and so many errors and so on. Starting with the DAO in 2016, all the way up to now, you've had exploit after exploit after exploit because it is extremely difficult to analyze, any Turing complete program. That's just from computer science. If you have loops, it's going to be very, very hard to analyze. So what you get with Bitcoin is a non-Turing complete smart contracts, and that means it's a lot easier to analyze. And this is why you can prove that the security of a Bitcoin smart contract, whereas with almost anything else, they're not interested in security at all. It's just sort of like, okay, well, let's make something fun and interesting, or let's move fast and break things, and you end up breaking people's wallets instead.
So for the Bitcoin smart contracts, the capacity to do things like basic conditionals, which is one of the things that people who are involved in the Ethereum space talk about as being so important. What's your view on that? How will it be implemented in Bitcoin?
Well, it's already implemented. So you have so one of the things Taproot does is it consolidates a lot of the use cases that we've been seeing over the last 10 years. The original language had a lot of different opcodes. The smart contract language in Bitcoin, it's called script, and it has like 150 different opcodes, which can do various things. And it's a stack-based language, so it's a little bit harder to reason about. So Peter Woollett has made something called Miniscript, which is a way to compile another language into script. And it's a lot easier to reason about. And it's based on the use cases that we've seen from people that are actually using Bitcoin. So usually when they're using Bitcoin, they want certain conditions like, okay, I want 2 of 3 of these people to sign, or 5 of these people to sign after 1 year of not being spent, something like that.
Right.
That's pretty hard to write in script, but in mini script, it's a lot easier because of the way the language is designed, and it compiles to script. So in a sense, they're functionally equivalent, but one's a lot easier to reason about, and it makes it a lot easier for programmers to do it. Taproot makes that even easier with this whole mass tree that comes as a part of it. And for a programmer, that's great, because now you can say, okay, here are the conditions under which I want this unlocked. And that's really the main use case for the smart contract. It isn't fancy loops and figuring out this or that. And you could do a lot of things with it. Another thing that you can do with Bitcoin are something called discrete log contracts, which have been coming more to Bitcoin lately. And it's this idea that you have an oracle that you trust, and two people sort of do a contract based on it. And it's fairly doable in Bitcoin. One of the companies that I advise, Atomic Finance, they did this for the election. They said, okay, if you want to take Biden or Trump, you can bet on it, and we'll be the oracle for that. And they'll say who won based on. It turned out to be a little more complicated than they thought it would be. They had to delay the actual payout because so much of it was up in the air for a while. But by doing this, you can essentially have different use cases, not just like bets on elections, but Bitcoin based options. So you can buy or sell call options based on a discrete log contract, as long as the oracle gives you the correct price of Bitcoin at the time of execution, and so on. So lots of really interesting use cases that can come out of those, and they're already there. A lot of companies are developing it, and they're a lot of that smart contract stuff is used as a part of Lightning. With hash time lock contracts, which are necessary, and so on. They're being used, just not in the sort of marketing way that Ethereum is, where this is one of the fallacies that a lot of people say is, hey, Bitcoin doesn't even have smart contracts. It's like, okay, you don't understand what smart contracts are, and you don't understand Bitcoin. They seem to think that Ethereum invented smart contracts or something. Smart contracts have been around since 1995. Come on, man. So it's kind of very annoying as a technical person to hear sort of lay people say that. But yeah, it's been there, it's being used, and it's going to be wonderful going forward.
Yeah. Jimmy, this hour has just flown by. We've touched on a tremendous number of subjects: Austrian economics, the value proposition, the history of Bitcoin, and now into smart contracts. What would you like to leave our viewers with?
Well, I know it's alt season, and a lot of people are tempted by altcoins right now. I would say look at the long term, right? And this is, I'm sure this is something that you talk about on this channel quite a bit, is what's the long-term value proposition? And don't just go to the marketing material, because the marketing material will tell you one thing, but you actually have to understand the protocol and how it works in order to make that long-term assessment. If you can't make that long-term assessment, then don't invest in it, because that's generally a very bad idea. If you can make a long-term assessment, then go do so. But think 5-10 years down the road. And if you look at Bitcoin in those terms, no one has lost money holding Bitcoin for 5 years. Even the people that bought at the absolute peak last time, $19,000, have made 3 times their money already. So I would say that thinking long-term will do very well. And I'm sure you'll come to the same conclusion that Bitcoin is the main thing, and all the other stuff is not really worth it.
Jimmy Song, always such a pleasure.
Thanks for having me on.
Thanks for joining us, and thank you for watching, everyone.